The job market is definitely gaining some momentum. It is Friday, May the 8th, and this is Markets with Megan. If you like this podcast, subscribe, hit the alarm bell. You can also share it with your friends, family, colleagues, neighbors, anybody who wants to look at the economic data that's released on a regular basis. What makes the headlines, and what does that mean for your investments? Well, this morning we received the monthly jobs report, and this is always a very important report, tends to be very, have market implications. And what we saw this morning is that the U.S. economy added 115,000 jobs last month. So we now are seeing the best 2 months in job gains for the U.S. economy that we've seen since 2024. Some of the other details are the unemployment rate was unchanged at 4.3%. Earnings grew 3.6% on a year-over-year basis. When we look at, though, the labor force participation rate, that actually fell to the lowest we've seen since October of 21. It's fallen for the past 5 months, and it's been led by those that are 55 and older, so leaving the workforce. The underemployment rate, or those that are working part-time because they can't find a job for economic reasons, that rose to a year-to-date high, so that's something to keep an eye on. The strength that we saw came from healthcare jobs, leisure and hospitality, trade, goods producing, and what's interesting is construction jobs are coming back as well. So it was the second consecutive month of gains in the construction jobs. And we have seen some mixed readings, but some good readings here and there on housing. So maybe we're getting a bit of the thaw in the housing market from a construction standpoint. Now, this is a very interesting report because the labor market is holding up better than some had anticipated. So what does this do? It gives the Fed the ability to not make any changes to interest rate policy. We don't think they're going to do anything this year. We're actually leaning towards, if inflation continues to be a problem because we're not getting this Middle East conflict wrapped up, then we could possibly see interest rates higher at the end of the year, them having to make some adjustment towards the end of the year. Now, the other things that we saw this morning is that University of Michigan came out with their consumer confidence report, their monthly report. And the first reading for the month of May is that confidence made another record low. So we have a good job market, consumer confidence that continues to make record lows, but yet an economy that's still expanding. What we look at from the consumer standpoint is that they're just very concerned about the inflation impacts of this war. What does it mean? How long are energy prices going to stay this high? So that's impacting confidence here. The other thing that we're watching closely is, even though earnings are growing 3.6% on a year-over-year basis, headline inflation in the last read that we got at the CPI level was rising 3.3. So real income here is very weak. This leaves very little room for error for the consumer. So we'll keep an eye on that. But to wrap it up from this report, it definitely keeps the Fed on hold for the near term. We think through the remainder of this year, with a chance we might have to see a rate hike in the fourth quarter. That's all we have for this week. If you want a history of our podcast, you can go to marketswithmegan.fm. Thank you.